So Bitcoin represents digital property, and it represents a property right to 8 billion people thing that someone richer than you and more sophisticated than you will want to buy from you in a decade. And if that's what you're buying, then you're probably going to be.
Imagine a world where you can control your own money without having to rely on a bank or government. A world where you can send and receive money anywhere in the world, instantly and cheaply. A world where your money is safe from inflation and government confiscation. This is the world of Bitcoin. Bitcoin is a digital currency that is not controlled by any government or bank. It is decentralized, meaning that it is not controlled by any single entity. Bitcoin is also scarce, meaning that there will only ever be 21 million Bitcoins in existence. Bitcoin is the best way to achieve financial freedom because it gives you control over your own money. You can use Bitcoin to buy and sell goods and services, send and receive money, and store value. In this video, we will discuss the benefits of Bitcoin and how it can help you achieve financial freedom. Don't miss out on the next big financial revolution. Subscribe now to learn more about Bitcoin.
This is not as important to Americans that have a bank they trust, but if you live in Africa and the bank is run by the cousin of the guy that just took over the country last week, then if you put your money in that bank, they're probably just going to take it. And if you want to convert your money from that local currency to another currency, they probably take half. Oftentimes the capital controls are such that the country will fix the exchange rate at half of the real value. So every time you change money, you give half of it to the bank and you get the other half. And so it's not a terribly fair thing for the proletariat. But what Bitcoin allows you to do is, if I wanted to buy your car and you were in Africa, I could pay you for your car in Bitcoin. And then you would get the fair exchange rate for the Bitcoin. Then you could hold the Bitcoin either on your own hardware device, you could be your own bank, or you could deposit the Bitcoin with a custodian somewhere outside of your country. Because Bitcoin is a global network, so everybody in the world, anybody can be a custodian of Bitcoin. So there's competition. So you would have an asset which is pure property, which is not being debased by capital, is not being debased by manufacturing or devalued by manufacturing, and is not being devalued by monetary inflation. You would not have to rely upon the local banking system, the local government, or the local currency. All three of those are weak links. And if you look at wealthy people, most people that are wealthy in the world are wealthy because they converted their currency, whatever they earned, they converted it into property. Like they bought, what does the royal family of the UK have? They own the middle of London. What does the Emperor of Japan have? They own the middle of Tokyo, right? If you own a block in New York City or Paris, then when would you ever want to sell that? You probably never want to sell it. You want to keep it forever. And if you want to stay wealthy, you buy that land and you hold it because it appreciates in value at the rate that the money collapses. But if you want to get wealthy, then you go leveraged long. So like if I can borrow a bunch of money, if I can borrow $10 million and buy $10 million worth of scarce desirable property, then every year it goes up in value 7%, and after 10 years it's doubled in value. So now my $10 million acquisition is worth $20 million, and I've got $10 million in equity. So then I refinance the property and I take out $5 million in equity and I live off of that without paying tax on it. The next 10 years, the $20 million property is worth $40 million. And then after 10 more years, the $40 million is worth $80 million. So you see how your family starts to become very wealthy because your grandfather bought 10 blocks in the middle of New York or in the middle of Paris or some city. Of course, it has to be scarce desirable, right? People have to want to live there.
Yeah.
And so the risk is if you bought those 10 blocks in the middle of, Kansas, maybe it doesn't appreciate at the same rate. Generally, this strategy works well when you're buying land in the middle of Tokyo, London, Paris, or New York, right? We all know stories of wealthy people that bought that land. But you could think about Bitcoin as cyber Manhattan. Imagine I created a city in cyberspace that had only 21 million blocks, and one day 8 billion people will want to live there. And they're never going to make more than 21 million blocks, and all 8 billion people can move in, and there's no mayor to put a zoning restriction on it or pass a city tax, and there's no governor to put a state tax on it, and there's no president or Congress to put a national property tax on it. And when the place where you live decides to tax it, you can fly on an airplane, to Singapore or Monaco or some other place that will give you, or you can move from one state. Maybe you move from a high tax state to a low tax state, and then you keep your property. So Bitcoin represents digital property, and it represents a property right to 8 billion people.
Saylor's perspective is eye-opening, especially when we consider global disparities. For many in the developed world, trusting a bank is a given. Yet, in regions where political instability reigns and the banking system is dubious at best, Bitcoin offers an unprecedented lifeline. It provides a solution that sidesteps capital controls, unfair exchange rates, and government interventions. Think about that. The ability to conduct business, store value, and achieve economic freedom, all outside the confines of a faulty system. But beyond the immediate benefits, Saylor touches upon an even larger concept: the idea of Bitcoin as a digital, immutable real estate, cyber Manhattan. But how can this digital space redefine property rights and wealth generation for billions?
Everybody in the world wants property rights. I mean, it's been the driving theme of human history for thousands and thousands of years. That's why people came to America. That's why they went west. That's why they went anywhere. So that's a very deep-seated theme in humanity. But the second thing is everybody wants money, and you either want it if you don't have it, or you want to keep it, right? And there's a whole set of dynamics of people that are actually passing laws to basically deprive you of your money. If you own assets that generate rents, that's a currency derivative. The rents are going to be devalued. If you own bonds, that's a currency derivative. They're going to be devalued. And every single fiat currency in the world is built to be devalued. The only question is, will it be devalued at 7% a year versus desirable assets? Or will it be devalued at 14% a year? Or will it be devalued at 40% a year? But it is 100% certain that the currencies will be devalued. The bonds are going to have a negative real yield. They'll be devalued. Value stocks and commercial real estate that's valued partially on the cash flows will be devalued. So Bitcoin kind of represents more like that trophy asset, like the one-of-a-kind trophy piece of art, or the one-in-a-kind franchise, or the one-in-a-kind beachfront property. Everybody wants. It's not valued based on cash flows. It's valued based upon its scarcity and desirability. Now, we have lots of examples of people that buy Ferraris as a store of value, or Rolex as a store of value, or commercial art, or art as a store of value. But the ideal money is something liquid and fungible. And Bitcoin is liquid and fungible. So it's like that high-quality, desirable real estate, but it's like buying a pure city block in the most desirable city on Earth. And it's got a global brand, because it's not, Tokyo's only interesting if you speak Japanese, and Paris is maybe interesting if you speak French. But, Bitcoin is neutral in cyberspace. The Chinese like it, the Russians like it, the Americans like it, the Europeans like it, the Africans like it, the South Americans like it. Why wouldn't you like it, right? It passes this last Bernard Arnault test, which is you ought to buy something that someone richer than you and more sophisticated than you will want to buy from you in a decade. And if that's what you're buying, then you're probably going to be okay.
Bitcoin is the future of money. It is a scarce, digital asset that is not controlled by any government or bank. Bitcoin is the best way to achieve financial freedom because it gives you control over your own money. In this video, we have discussed the many benefits of Bitcoin, including its scarcity, its decentralization, and its global reach. We have also seen how Bitcoin can help people in developing countries achieve financial freedom. If you are interested in learning more about Bitcoin and how it can help you achieve your financial goals, I encourage you to subscribe to my channel and watch my other videos.